in the crypto world. If lots of people are buying, selling, or talking about Bitcoin or another cryptocurrency, it's trending. Market cap. Now, market cap is like the total value of all the toys in a toy store. If every toy has a price tag and you add up the cost of every toy in the store, you'd know how much the whole store is worth. FDV is like imagining how big the balloon will be when it's all fully blown up. So in crypto, FDV looks at how much all the coins in a project would be worth. In this episode, we're going to be talking about Bitcoin terminology that even a 5-year-old can understand. I'm Matthew Fraser, and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. Hey guys, welcome to Crypto Collective. My name is Matthew Fraser, and in this episode, we're going to be talking about Bitcoin terminology that even a 5-year-old can understand. Let's jump into it. Number 1, tokenomics. Imagine you have a bag of candy and you want to share it with your friends. You decide how many candies you'll give out and how many you'll save for a special day and how many you'll eat for yourself. Tokenomics is like the candy sharing rule book for Bitcoin or any other cryptocurrency. It explains how the candles or tokens are made, who gets them, how they're used, and how they grow in value over time. There are many resources that you can tap into, especially on YouTube, which can dive deep into the tokenomics of each cryptocurrency. Now, many hardcore investors will dive deep into the tokenomics to understand whether the cryptocurrency is worth investing into or not. Market cap. Now, market cap is like the total value of all the toys in a toy store. If every toy has a price tag and you add up the cost of every toy in the store, you'd know how much the whole store is worth. Now, for Bitcoin, the market cap is the total value of all the Bitcoins that exist. It's a big number that shows how valuable Bitcoin is compared to other cryptocurrencies or even companies. So you'll hear a lot of people talking about market cap when it comes to Bitcoin and other assets like gold, like bonds, like property. Right now, gold sits at about $18 trillion and Bitcoin sits at about $2 trillion. And it's expected that sometime in the future, it will be worth more than gold. So worth more than $18 trillion. Circulating supply. So imagine all the balloons at a party that are already blown up and floating in the air. The circulating supply is the number of Bitcoins that are already created and available for people to buy, sell, or use. It doesn't include the balloons or the Bitcoins that are still in the bag or hidden away for later. One thing to consider when thinking about circulating supply is the amount of Bitcoin that are lost forever. Now, there's different numbers depending on who you speak to. Some say 4 million, some say even up to 5 million Bitcoins that are gone forever. The keys are lost. They'll never be seen again. Now, this is good for those who currently hold Bitcoin because the value of your Bitcoin is only going to increase as the supply or the circulating supply diminishes. Total supply. Now, think about how many balloons could be at the party if every balloon in the bag was blown up. The total supply is the maximum number of Bitcoins that will ever exist. Now, for Bitcoin, that number is 21 million. And once they're all blown up, or what we call mined, there won't be any more made. The current mine supply is about 19.5 million Bitcoin. Now, these will be mined out over the next 100 plus years. In fact, all the way till 2140 will be when the last Bitcoin is mined. So what you're going to say to me, Matthew, is how come we've already got 19.5 million Bitcoin in the market and we've got a total supply coming of 21 million? Well, that's because of the halving. Now, when Bitcoin was first implemented, there was a lot of Bitcoin that could be mined out of the system. In other words, how many Bitcoin could be created. And at every 4 years, the amount of Bitcoin that can be created through mining diminishes or is halved. So right now there's 19.5 million approximate Bitcoin, and between now and 2140, the remaining 1.5 million will be mined. And every 4 years, the amount halves. As of today, 450 Bitcoin can be mined from the system. And in another approximately 3 years' time, it will drop down to 225 Bitcoin a day. And then another 4 years after that, it'll drop down to 112 Bitcoin a day, all the way out till 2140. Now, if you want to go down the rabbit hole a little bit further, you're going to say, well, why would it be worth mining Bitcoin at such small amounts into the future? It's because the Bitcoin price value, I should say, is going up over time. So as of right now, one Bitcoin is about $100 US. Now, by the year 2030, it's expected to be anywhere between $1 million to $1.5 million. So even though you'll be able to mine less Bitcoin per day into the future, the value of each Bitcoin has increased substantially, still making it worthwhile to mine out of the system, especially for those who are mining as a living. So Bitcoin mining is actually based on a lottery system, and the miners are computer systems, and the computer systems are performing calculations in order to guess the lottery of the numbers within the code. And if all those, or if your computer or your computers get the right lottery numbers, then you win the Bitcoin. When you research Bitcoin miners, and if you go to YouTube right now and type in Bitcoin mining warehouse, you'll see there's massive warehouses with thousands and thousands of computers in them, all mining away, trying to guess the lottery numbers in order to win the Bitcoin. That's it for Bitcoin mining. Let's move on to the next one. Okay, let's move on to the next one. Fully diluted valuation, or FDV. So imagine you have a balloon, but it's only half inflated right now. FDV is like imagining how big the balloon will be when it's all fully blown up. So in crypto, FDV looks at how much all the coins in a project would be worth if every single coin, those already created and those still being blown up into existence, were out there in the market. It's a way of seeing the full potential value of the project when everything is done. Let's explain it in book terms. Using just two books, my favorite books, of course, The Bitcoin Standard and Bitcoin Evangelism. So let's just say this book, which is The Bitcoin Standard, has been produced and it's worth today $100. This book is yet to be produced and it will be worth $100 as well. So therefore, combined, the FDV is $200. All right, dilution. One of my favorites. Picture a big chocolate cake that's divided into 10 slices for you and your friends. Now, if more people show up, you might have to cut the slices smaller so everyone gets a piece. Now, that's dilution in crypto. When there are more tokens created, the value of each piece or token can get smaller because it has to be shared with more people. Okay, let's talk about hurdle rate. Imagine you're playing a jumping game and there's a line drawn on the ground that you have to jump over to win a prize. If you can jump higher than the line, you win something extra. If you can't jump high enough, you don't win anything. So in the world of money and investing, the hurdle rate is like that line. It's the minimum amount of money someone wants to earn from an investment to make it worth their time and effort. So if Bitcoin or any other investment can jump over that line, it's a winner. And if it can't, they might have to look for something else. Now, for example, right now we talk in actual terms that the hurdle rate in Australia would be somewhere between 10 to 15%. So if you put your money in the bank, and right now your money in the bank is probably only earning between 4 and 5% per annum, you are below the hurdle rate. The hurdle rate is something you have to overcome because of things like inflation and money debasement. If you've got your money in the bank earning 4 or 5%, you're at a loss. You're not even keeping up with inflation and money debasement. And that's why you have to put that investment, instead of putting it in the bank, you have to put into something like Bitcoin, which in just the year of 2024 saw an increase of 120%. So that well and truly was over a hurdle rate of 10 or 15%. Now, on that note, if you're not achieving the hurdle rate of between 10 and 15% per annum, you're actually going backwards, right? It's like you're paddling in the ocean, but you're sinking. Yeah, you're drowning by the second. And this is what they call theft. Theft of your time, energy, and money. All right, let's talk about trending. Now, remember when the coolest new toy came out and everyone at school was talking about it? That's what trending means in the crypto world. If lots of people are buying, selling, or talking about Bitcoin or another cryptocurrency, it's trending. It's like the popular kid at school that everyone wants to hang out with. It's not just cryptocurrencies and Bitcoin that can be trending. It's also narratives or categories within cryptocurrency. And one of the biggest trending narratives right now is AI. So AI, crypto, are certainly one to look out for in 2025. Bullish or bearish? Now imagine a strong bull charging up a hill. Now that's bullish, when people are excited and think Bitcoin's price is going to go up forever. Now picture a sleepy bear heading into a cave to hibernate. That's bearish, when people are nervous and think the price will go down. These terms help people describe how they feel about the market. So if you're excited about the market, you're bullish. And if you're not excited about the market, you're bearish. All right, market cycles. So think about the seasons on our planet: spring, summer, autumn, and winter. Each one feels different, but they always come back around in the same order. So the market has seasons too. Sometimes it's summer, when prices are high and exciting and everyone's making money. Then comes winter, when prices drop, things are slowing down. Now, these ups and downs happen in market cycles, just like the changing weather. So when we're thinking about the market cycle and where we are today, by all accounts, we're in the up cycle. So things are looking good. Things are happy and sunny. And 2025 is looking like it's going to be one of the biggest crypto up cycles of all time. The risk for you right now is having no exposure to the market. So when thinking about the market cycles, perhaps during the winter time is when you want to start accumulating all your cash in order to deploy it into the market. Now, although it would be considered a bearish time when the markets are low, it's also the time when you should be deploying into the market because it's low, taking advantage of the low times so that when it starts rising up, you've got the most amount of leverage within the market. What most people do though, is they wait for things to go up to the top before they deploy their cash. In other words, they have to buy less of the asset than what they could have when it was in the bear time or the winter time of the cycle. So that is definitely something to think about as we move into the cycles into the future. Make sure you're deploying cash during the bear or the winter cycle periods. That being said, it's also very hard to do psychologically because at the winter times or the bearish times, everyone else is saying, this is a terrible time for the markets. We need to get out. It's heading to zero. But that's when life-changing money can be made, when you deploy when others are walking away. Hey, just quickly, if you're ready to dive deeper into crypto and Bitcoin and build real wealth, join my free crypto collective community. It's where I share exclusive insights and strategies and live discussions to help you succeed. Whether you're a beginner or scaling your portfolio, click on the link in the description and join us today. Now back to the episode. Okay, guys, that wraps up that episode of terminologies, but don't go away yet because now I'm jumping into a new part of this episode, which when I start wrapping up towards the end, which is answering your questions. All right, this first question comes from Ty. He asks, borrowing against Bitcoin has the same chance of a margin call when it dips below a certain LVR as in shares, just like shares. How can you mitigate this? Asking for several friends. Great question, Ty. Thank you so much. Now, so it's very similar to like a property, right? You want to buy a property or you might have a property already. Let's pretend that you own it outright. You can go to a bank and say, I want to borrow $200,000 against my property, okay? And they'll just give you that as cash. You can do the same thing with Bitcoin. So you can use your Bitcoin as collateral for cash. Now, just for you guys, I have gone through this exercise and experimented the process just so you can understand, and I can understand too. So what I did is I went to a company in Australia and I bought $10,000 worth of Bitcoin. Now, if you already have $10,000 worth of Bitcoin, you could transfer it to this exchange as well. You could do the same thing, but I went in and bought $10,000 worth of Bitcoin. Then what I did is I utilized their tools to borrow against that Bitcoin. So what happens is I give up the Bitcoin. It now sits with them under their custody, but I still own it, just like you do with the property. You own the property and the bank still lends you the money. So they've now got custody of my Bitcoin. So they will lend you up to 40% of the value of your Bitcoin, right? So that's $4,000. So I jumped through the hoops, got approved, and they then sent that $4,000 into my bank account. But here's what I did next though. I didn't just go and spend that money on a Louis Vuitton bag or something. I sent the money back to the exchange, the $4,000, and I purchased another $4,000 worth of Bitcoin. So now I have another 40% exposure to the Bitcoin market. Now, a question is going to be, but what is the interest rate? How much are they going to charge me to do this? Now, it's a great question. 9.5% is the current interest rate. So as long as, that's for a whole year. So in this case, roughly 10%. So it's going to be $400 in a fee, which is roughly 10% on my $4,000. So let's imagine at the end of the year, I will owe $4,000, which is the initial capital, plus the $400 in interest. Now, Ty's question related to the LVR and margin call. So as the price of the Bitcoin will fluctuate. I'm not going to pretend for a second that you've just bought $10,000 and it's going to sit $10,000 for a whole year. It's going to fluctuate with the overall market. As your Bitcoin increases in value, you can now borrow more money. Okay, so if it increased to $20,000 value, for example, this company would come back to me and say, hey, you could borrow another $4,000, which would make it still 40% of the total of the 20,000. But if the value of the Bitcoin decreased, I have to do a couple of things, one of a couple of things. One is I have to now buy more Bitcoin to put in to increase the value, so I keep the same 40% LVR, or I have to pay down some of my $4,000 debt. Okay. Now I can tell you, looking right now on the dashboard of this loan, I can tell you though that it gives me a rating and it has like a line bar and it says, once I get up to a 50% LVR, it says attention is needed, right? So in actual fact, this loan would really stay healthy all the way down to about a price of a valuation of about $8,000. So I've bought $10,000 worth of Bitcoin, but if it dropped down, which is 20%, if it dropped down to $8,000, I would still be 50% LVR, a $4,000 loan against the $8,000 value. And in that particular case, this company would say, my loan is still healthy, right? I don't have to do anything. If it went though over 50% LVR, so if your value of your Bitcoin dropped below $8,000, then it says repayment notice. So this company is going to send me a notice to say, hey, fix up your loan. Either you buy more Bitcoin, like I mentioned before, or you pay down your debt. And if it got all the way up to a 60% LVR, then the company says they're going to issue you with a default notice. So in a nutshell, to answer Ty's question, there are plenty of warnings along the way should the Bitcoin drop. If it goes up, it doesn't even matter. But if it goes down, if the valuation goes down of the Bitcoin, there are plenty of places along the way where this company is going to notify you to get your loan back into order. As an absolute worst case, let's say you completely forgot about this loan and you turned off all notifications and everything, and you went over the 60%. My understanding is the company is going to sell the Bitcoin, pay back their loan, and then you get the difference, okay? So that's something that you don't want to do because you'd rather just keep the Bitcoin, but at least there's plenty of forewarning should the Bitcoin drop in value. Obviously, this company wants to look after you. All right, so good question, Ty. On to the next question. It's from Hayden, and he says, I've been blocked by my bank when transferring money to the exchange. Which bank do you use, or do you have any experience in this? That is a big question right now because if you're new to the Bitcoin space or crypto space, you don't know what you don't know. What I'm going to tell you though is that getting your money, like, so you get to the point where you'll be thinking, I'm going to buy some Bitcoin now. I'm convinced. Now I'm going to take the plunge. You'll go to your bank. Let's say you've already set up your exchange, and then you want to transfer some money over to your exchange. It might be like $100 or something. And then all of a sudden, you will find that the bank has put a block on your transfer. So in Australia right now, there are so many scams and the banks are running to the hills. They do not want to have a part of this. So what you'll find is that the bank will put a block on your transfer, most likely. They may call you. You'll have to answer a whole ton of questions, and then they may let you transfer the money over. They may release the money or release the account. And so the only way around this is to, personally, I've got a lot of good experience with ANZ. I've also used Macquarie. But if I just talk about Macquarie as a real life example, I've been using Macquarie for over a year now, transferring funds from Macquarie to the exchange. Initially, I had some issues, but I cleared them up very quickly, and now I don't have any problems. I've got some new members who are in my group who have also started up with Macquarie, but they are having issues, right? And my understanding is Macquarie are now not allowing transfers to crypto exchanges for any new clients, right? So if you're old like me and you've been there for a while, no problems. You're a new person, they don't want a bar of it. So to get around that, you're going to have to call around to each bank. I know it's a tedious process, and find out what their policy is on transferring funds from your bank to a crypto exchange. That's the only thing you'll be able to do. All right, guys, thank you so much for joining me on this episode. I hope you found those questions really helpful for yourself as well. If you've got your own questions, put them into the chat below, and I look forward to answering those on a future episode. Or I've got a ton of free information in my Crypto Collective group, which anyone can join. It's absolutely free. I know what you're gonna think. Matt, why aren't I charging? Well, I wanna give the information to you because I want you to succeed as well. So find the link around in the description or the bio if you're gonna see this on Instagram. Thank you so much, and I look forward to seeing you in the next episode. Take care. Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.